What if everything you thought you knew about crypto rankings is about to change faster than anyone expected? And what if one digital asset suddenly moves so aggressively that it challenges the position of giants like Ethereum in a matter of weeks, not years? And what if the numbers being discussed right now are so extreme that most people instantly dismiss them without even looking at the deeper logic behind them? Because today we are breaking down a scenario where XRP is being projected at $27,000. And at the same time, there are claims that Ethereum could be flipped in just 2 months. And whether you believe it or not, you need to understand why people are even saying this right now. Now, when you first hear a number like $27,000 for XRP, the natural reaction is disbelief because it sounds unrealistic and far beyond what the market has ever seen before. But in crypto, extreme predictions often come from specific narratives, and these narratives usually start with a mix of speculation, technical assumptions, and sometimes misunderstood data that spreads quickly across the community. So instead of ignoring it completely, the smarter approach is to break it down piece by piece and understand where this idea is coming from and whether there is any logic behind it or if it is purely hype. Right now, XRP is one of the most discussed assets in the market because of its connection to real world finance and its use case in cross border payments. And unlike many other cryptocurrencies that rely mainly on speculation or community hype, XRP has always been positioned as a bridge asset that could potentially connect banks, payment providers, and financial systems across different countries. And because of that, whenever there is even a small shift in regulation, adoption, or institutional interest, the conversation around XRP becomes extremely intense and sometimes exaggerated. The idea of XRP reaching such a high value usually comes from a specific line of thinking that focuses on global liquidity and the total amount of money moving through the financial system every single day. And supporters of this idea argue that if XRP becomes a major bridge for international payments, then its price would need to increase significantly to handle large volumes efficiently, and this is where people start throwing out massive numbers without always considering the full picture, such as supply, market cap, and real adoption speed. At the same time, the claim that Ethereum could be flipped in just 2 months adds another layer of excitement and confusion because Ethereum is not just any cryptocurrency. It is one of the most established networks in the entire space with a massive ecosystem of applications, developers, and users. So the idea that another asset could overtake it so quickly raises serious questions about what kind of event or catalyst would be strong enough to cause such a shift in a short period of time. This is where market psychology plays a huge role because in crypto, narratives can move faster than fundamentals. And when people start believing that something big is about to happen, even if the data is not fully confirmed, it can create momentum that pushes prices up rapidly, especially if large investors or institutions are involved. And this is why it is important to understand not just the numbers being mentioned, but also the timing and the reasons behind those predictions. Another factor that fuels these extreme projections is the idea of supply shock, where a large portion of XRP is held or locked in certain ways. And if demand suddenly increases while available, supply remains limited, prices can move very quickly. But again, this depends on real demand, not just speculation. And that is something that many predictions overlook because they focus more on potential rather than current reality. When it comes to flipping Ethereum, the conversation usually shifts toward market capitalization rather than just price, because for XRP to overtake Ethereum, it would need to reach a higher total market value, and that depends on both price and circulating supply. And while rapid changes can happen in crypto, doing this within 2 months would require an extraordinary level of capital inflow and a major shift in investor sentiment across the entire market. So, what you are seeing right now is a combination of bold predictions, growing interest, and a market that is always looking for the next big move. And while some of these ideas may seem unrealistic at first, they often reflect deeper trends or expectations that are worth paying attention to, even if the final numbers do not play out exactly as predicted. We are going to go deeper into the actual numbers behind this $27,000 claim and break down whether it is mathematically possible or if it requires conditions that are far beyond what the current market can support. And this is where things start to get very interesting, because once you look at the data clearly, the picture becomes very different from what most people expect. Now, when we move deeper into this $27,000 XRP claim, the first thing that needs to be understood clearly is the relationship between price and market capitalization. Because in crypto, price alone does not tell the full story. And it can often be misleading if you do not look at how much total value is required to support that price. And this is exactly where most extreme predictions start to break down when they are examined closely with simple logic. XRP has a very large total supply, and even though not all of it is actively circulating at the same time, a significant portion is already in the market. So when someone says XRP could reach $27,000, what they're really saying is that the total market value of XRP would need to reach an extremely high level that is far beyond anything we have ever seen in the financial markets. And this is not just about crypto anymore. This would mean competing with the total value of major global assets combined. To make this easier to understand, imagine taking the current supply of XRP and multiplying it by a price of $27,000. The result would be a number so large that it would exceed the total value of many stock markets, entire industries, and even challenge parts of the global financial system itself. And this is why many analysts immediately question such predictions, because they require a level of capital that simply does not exist in the crypto space right now. However, supporters of this idea often argue that XRP is not meant to be compared to traditional assets in the same way, because they believe it could act as a bridge for global liquidity, meaning it would not need to hold that entire value permanently, but instead facilitate massive amounts of money moving through it very quickly. And this is where the argument shifts from static valuation to utility based valuation, which is a completely different way of thinking about price. In this scenario, XRP would be used by banks and financial institutions to settle transactions across borders in seconds, replacing slower and more expensive systems. And if trillions of dollars are moving through XRP regularly, some believe that the price per unit would need to be very high to handle those transactions efficiently without requiring an unrealistic number of tokens per transfer. And this is one of the core ideas behind these high price predictions. But even with this logic, there are still important challenges that need to be considered, because the speed of transactions means that the same XRP tokens can be reused multiple times throughout the day, which reduces the need for an extremely high price. And at the same time, financial institutions typically prefer stability over volatility. So relying on an asset with rapid price changes could introduce risks that they may not be willing to accept without strong regulatory frameworks in place. Another important point is adoption speed, because for XRP to reach anything close to these extreme valuations, it would require not just one or two partnerships, but widespread global adoption across banks, payment providers, and possibly even governments. And this kind of transformation does not happen overnight. It usually takes years of testing, integration, and trust building before systems at that level are fully implemented. Now, when we connect this back to the idea of flipping Ethereum in 2 months, the numbers become even more critical, because Ethereum already holds a massive position in the market due to its role in decentralized applications, smart contracts, and the entire ecosystem of decentralized finance. So, for XRP to overtake it in such a short time, it would need a sudden and massive increase in both price and investor confidence at the same time. This would likely require a major catalyst, such as a regulatory breakthrough, a large scale institutional adoption announcement, or a shift in global financial infrastructure that directly benefits XRP in a clear and immediate way. And while these types of events are possible, predicting their exact timing and impact is extremely difficult because they depend on many external factors, including government decisions, economic conditions, and technological readiness. At the same time, market sentiment plays a powerful role because if enough investors start believing that XRP is about to experience a major breakout, it can create a self reinforcing cycle where demand increases rapidly, pushing the price higher, which then attracts even more attention and investment. And this is often how sharp moves happen in the crypto market, especially during periods of high excitement and speculation. But it is also important to remember that these cycles can work in both directions. And just as quickly as prices can rise based on strong narratives, they can also correct if expectations are not met or if the market realizes that the fundamentals do not support the hype at the current level. And this is why understanding the difference between possibility and probability is so important when evaluating bold predictions like this. So at this stage, what we are really seeing is a clash between two perspectives, one that focuses on long term potential and utility, and another that focuses on current data and realistic timelines. And the truth usually lies somewhere in between, where growth is possible, but not always in the extreme way that is being suggested. We are going to look at what kind of real world events or catalysts could actually push XRP toward a major breakout and whether any of those conditions are currently forming in the market right now. Because this is where the conversation moves from theory into real possibility. Now, when we move from theory into real world possibilities, the most important question becomes very simple, and that is what exactly could push XRP into such a powerful move that people even start talking about flipping Ethereum in a short time frame. Because without strong and clear catalysts, even the best narratives usually fade away without creating any lasting impact in the market. One of the biggest factors that could influence XRP in a major way is regulation, because for years, the uncertainty around legal status has held back full scale institutional adoption. And when large financial players are unsure about how an asset will be treated by regulators, they tend to stay on the sidelines or move very slowly. But the moment there is clarity, the entire situation can change almost instantly as confidence begins to build across the market. If clear regulations fully support XRP's use in cross border payments and financial systems, it could open the door for banks, payment providers, and even governments to start integrating it into their operations. And this is not just about price movement anymore. This is about real utility being activated on a global scale, which is something that very few cryptocurrencies can claim at this level. Another major catalyst is institutional adoption because retail investors alone usually cannot push an asset to extreme valuations without support from large capital. And when institutions enter the market, they bring not only money, but also credibility. And this combination can create a powerful shift in how an asset is perceived, especially if multiple institutions start using it for real transactions instead of just holding it as a speculative investment. There is also the factor of global payment systems evolving over time because the current financial infrastructure is often slow, expensive, and fragmented. And many organizations are actively looking for faster and more efficient alternatives. So, if XRP positions itself as a reliable solution in this space and proves its efficiency consistently, it could gain momentum in a way that aligns with its original purpose. At the same time, partnerships and integrations play a very important role because announcements alone are not enough. What matters is actual usage. And if major financial networks begin using XRP in their daily operations, even at a small scale initially, it can create a foundation for gradual expansion. And over time, this could lead to a network effect where more participants join because the system is already working. Now, when we bring Ethereum into this discussion, it is important to understand that Ethereum operates in a different area of the crypto market because it is heavily focused on smart contracts, decentralized applications, and the broader ecosystem of blockchain based services. And this means that XRP would not just be competing on price, but also on relevance and utility in the eyes of investors. For XRP to flip Ethereum, there would need to be a shift in market focus where investors start prioritizing payment solutions and financial infrastructure over decentralized applications. And this kind of shift can happen under certain conditions, especially if there are major changes in the global economy or if new regulations impact how different types of blockchain projects operate. Another possible catalyst is liquidity movement because in crypto, capital often flows from one sector to another based on trends. And if a large amount of money starts moving into XRP due to strong narratives or confirmed developments, it can create rapid price increases that attract even more attention. And this cycle can accelerate quickly if the timing aligns with overall market momentum. There is also the psychological aspect of milestones because when an asset breaks key resistance levels or reaches new highs, it can trigger excitement and fear of missing out among investors. And this emotional response often leads to increased buying pressure, which can push prices even higher in a short period of time, especially in a market that is already known for its volatility. However, it is important to stay realistic while looking at these possibilities because even with strong catalysts, large scale changes in market rankings usually take time. And while short term spikes can happen, maintaining a higher position requires consistent demand, strong fundamentals, and continued confidence from both retail and institutional participants. What we are seeing right now is a situation where multiple potential catalysts exist, but they are still in different stages of development. And until they align in a clear and powerful way, extreme outcomes like a 2 month flip or a massive price jump remain uncertain, even if they are not completely impossible under the right conditions. So at this point, the focus should not just be on the final numbers being discussed, but on the signals that indicate whether these catalysts are actually strengthening or weakening over time, because that is what ultimately determines the direction of the market in both the short term and the long term. We are going to break down the timeline aspect and analyze whether a 2 month window is realistic for such a major shift, or if this is where the prediction becomes more about hype than actual probability. And this is where timing becomes the most critical factor of all. Now we reach one of the most important parts of this entire discussion, and that is the timeline. Because even if we assume that XRP has strong long term potential, and even if we accept that there are real catalysts that could support growth, the question of whether something like flipping Ethereum or reaching extreme price levels can happen in just 2 months is where the prediction becomes much more difficult to justify based on normal market behavior. In financial markets, especially in crypto, rapid movements do happen. But when we look at major shifts in ranking between top assets, these changes usually require sustained momentum, large capital inflows, and consistent narrative strength over time. And this combination rarely builds up fully within such a short period unless there is an extreme and unexpected global event that completely reshapes investor behavior. For XRP to overtake Ethereum in 2 months, it would need not only a sharp increase in its own value, but also a situation where Ethereum either remains stagnant or decline significantly at the same time. And this dual movement is very hard to coordinate in real market conditions because both assets are influenced by broader crypto market cycles, institutional activity, and macroeconomic trends that usually affect them together rather than separately. Another important factor is liquidity, because even if interest in XRP increases rapidly, the amount of capital required to push it to a level where it surpasses Ethereum's market cap is extremely large. And this kind of capital does not usually enter a single asset all at once. It tends to flow gradually as confidence builds, as adoption increases, and as market participants adjust their strategies based on ongoing developments. We also need to consider how information spreads in the market, because in crypto, narratives can move faster than actual adoption. And this often creates situations where price reacts before real world usage catches up. But over time, the market usually corrects itself to reflect actual utility, meaning that short term spikes can happen, but maintaining those levels requires strong and continuous support. When we look at historical examples, even some of the biggest crypto rallies in history did not result in immediate changes in overall market leadership within a matter of weeks, because large scale shifts usually go through phases, starting with accumulation, followed by expansion, then public attention, and finally consolidation. And each of these phases takes time to fully develop. So when someone suggests a 2-month window for a complete flip between XRP and Ethereum, what they are really assuming is that multiple major events will align perfectly within a very short period of time, including regulatory clarity, institutional adoption, massive retail inflow, and possibly a broader crypto market surge. And while none of these are impossible individually, the probability of all of them happening together in such a short span is extremely low. At the same time, it is also important not to completely dismiss short term volatility, because crypto markets are known for sudden spikes driven by news, speculation, or unexpected announcements. And in some cases, these spikes can create temporary shifts in rankings, or at least bring assets very close to each other in market capitalization. But these moments are usually not stable and often reverse once the initial excitement fades. Another angle to consider is Ethereum's own strength, because Ethereum is not a passive asset waiting to be overtaken. It is constantly evolving through upgrades, scaling solutions, and ecosystem expansion. And this means that any asset trying to challenge it would not only need to grow, but also outperform a moving target that is actively improving its own position in the market. This is why timing becomes such a critical issue, because even if XRP is progressing in the right direction, the speed of Ethereum's development and the overall crypto market conditions will heavily influence whether any meaningful shift can happen. And in most realistic scenarios, these types of transitions are measured in years rather than weeks. So at this stage, the idea of a 2-month flip appears to be more aligned with extreme optimism or market hype rather than a grounded expectation based on historical patterns and current market structure. But it still reflects a broader truth, which is that both assets are part of a rapidly evolving financial system where long term change is possible, even if short term outcomes are often exaggerated. We will bring everything together, evaluate the overall probability of these claims, and clearly separate realistic long term potential from short term hype, and also conclude with a financial disclaimer and final message for the audience. Now, bringing everything together, the first thing that becomes very clear is that both ideas being discussed, XRP reaching extremely high valuations like $27,000 and XRP flipping Ethereum within just 2 months, are based on a mix of long term optimism, strong narratives, and very aggressive assumptions about how fast global financial systems and crypto adoption can evolve. But when we break them down using realistic market structure and historical behavior, the picture becomes much more grounded and less extreme. The reality is that XRP does have a strong narrative around real world utility, especially in cross border payments and financial settlement systems. And this is one of the reasons it continues to attract attention from both retail and institutional investors, because it is not just a speculative asset in theory. It is also positioned as a potential infrastructure layer for global transactions, and that gives it a unique place in the crypto space compared to many other projects. However, even with strong utility, price movements of the scale being discussed require massive and sustained capital inflows, and those inflows depend on multiple factors such as regulatory clarity, real adoption, institutional trust, and overall market conditions. And these are not things that typically align perfectly in a short time frame, especially not within just a couple of months. When it comes to Ethereum, it remains one of the strongest and most established ecosystems in the entire crypto industry, with deep integration into decentralized finance, NFTs, smart contracts, and thousands of applications that continue to expand its network effect. And this makes it a very strong competitor in terms of market dominance, meaning that overtaking it would require not just growth from XRP, but also a relative slowdown or shift in capital away from Ethereum at the same time. So, when we evaluate the claim of a fast flip between XRP and Ethereum, the most realistic conclusion is that while shifts in ranking are possible in the long term under certain conditions, the idea of this happening within 2 months is highly unlikely based on current market structure, liquidity requirements, and the natural pace at which institutional adoption typically develops in global financial systems. At the same time, it is also important not to ignore the broader message behind these predictions, because they reflect growing interest in how blockchain technology could reshape financial infrastructure. And even if the exact numbers are not realistic in the short term, the underlying trend of digital assets becoming more integrated into global finance is very real and continues to develop step by step. In markets like crypto, narratives often move faster than reality. And this creates a gap between expectation and execution, where prices can sometimes react strongly to news or speculation before the actual adoption takes place. But over time, the market usually adjusts to reflect real usage, real demand, and real economic value rather than extreme projections. So, the most balanced way to look at this situation is to separate emotion from analysis, understand the potential of XRP as a long term asset in the financial system, recognize Ethereum's strong position as a leading ecosystem, and accept that while major shifts are always possible in crypto, they usually happen gradually rather than in sudden, unrealistic timeframes. Financial disclaimer: this content is for educational and informational purposes only and should not be considered financial, investment, or trading advice. Cryptocurrency markets are highly volatile and risky, and prices can change quickly. Always do your own research and consult with a qualified financial advisor before making any investment decisions.